Good afternoon, guys. Hey, this is Bruce Marshall from Simpler Trading with the nightly video for Wednesday, July the 25th. And I've got a chart up here of the S&P. If you did not see the market, if you weren't watching the market today, pretty big day. We had yesterday, this is overnight here, so yesterday we sold off and got down to 28.11 and kind of rallied into the close here. Opened up this morning kind of weak and just really chopping, not much going on. And then we had a pretty long steady climb. But notice this. This was pretty crazy. If you were watching the S&P, it was up. This looks probably a lot more than it is. So there's 28.20, 28.25, 28.30. So we were up 2 points, 3 points, 5 points, 7 points. We ended up up 20, almost 26 points here. But notice this again. This is short covering. Boom, complete vertical. Now this happened about 20 minutes before the close. Let's see when it started. It started 30 minutes before the close. So that's at 2:30 Central Time, and we went from 28.30 all the way up to 28.48. I mean, 18-point move in a matter of, I don't know, 10, 15 minutes. Crazy. It's very obvious that's short covering, right? That's not your normal, we're going to grind higher, this is short covering. And the more short covering, begets more short covering, right? And the reason I think that was happening is people were the shorts were getting scared as we were coming to some of these levels. We had a pretty 1272 extension was at 28.35, and see, we hit that before. Here we got close here, but we hit this level before, and I'm sure there was a lot of stops in place. So when we hit that started triggering those stops. And guess what? Let me zoom in and show you how this works. It's pretty cool. So, well, it's cool depending on what side you're on. So there's 28.35. There's our stop, right? There's probably stops in here, right there, probably right there, probably right here. So basically what happens when these guys, the first guys that got stopped out, short covering, run it up into here, and then these guys that are at this level that have their stops there, they go, oh no, I got to cover. And these guys, same thing, oh man, they got me, I got to get out, so come up here. And then this is when the exhaustion happens. And coincidentally, what is that? 28.50. It's actually 28.48, but that's close enough, right? So we're almost there. Then, guess what happened after the close? If you haven't seen this, Facebook missed. And I think that all of this was based on Facebook crushing it. They were supposed to have a great quarter, all that kind of stuff, crush it, go higher. We would continue the rally tomorrow and all that kind of stuff. And I don't know. I don't know what will happen tomorrow, but it doesn't look good at this point. Now we've got a lot of other earnings coming out, but let's look at the Nasdaq all-time high, right? A new all-time high. So let's check the Nasdaq after hours here, and you can see it's obviously it's pulling back. Now the futures don't open back up for like 20 more minutes, but I can guarantee you they're going to be down here somewhere. But again, that might work itself out overnight. I don't know. It's hard to say. We have in the morning, we have, let's see, Celgene, Southwest, MasterCard, McDonald's, Marathon Petroleum, Raytheon. A lot of, there's a lot more names coming out in the morning. And so, we could get a lot of positive, news and kind of offset this with Facebook. But I think this was a pretty big shock for the tech sector. Kind of the same way with Google. Google kind of shocked everybody the other way, to the upside, when they reported. And, had this, well, let's see, where was it? Had that spike to the upside. Nobody was expecting that. Well, nobody was expecting this Facebook, to the downside either. So we'll see what happens. Now we do have Amazon coming up, and then next week we've got Apple. So it's not over, yet. And I, this doesn't really this Facebook thing. We'll see how it looks, how bad it looks in the morning. I have not seen what the conference call says or anything like that, but it continues to go down. I mean, this is from 219 down. We're at 173 right now. This is not looking sporty for tomorrow. It will either way. It will weigh a wet blanket on the tech sector at least, but I don't think it'll kill the techs or the Nasdaq, because everybody is going to be waiting on Amazon and Apple and so forth. So anyway, one last thing I wanted to mention here. So the Nasdaq all-time high, S&P's getting very close. The all-time high is 2872, so we're getting pretty close to all-time high in the S&P. But what's not participating? Look at the rut. Just nothing. And then we sold off a pretty good bit yesterday, and today was nothing special. I think the rut's just catching its breath. Honestly, I think the rut goes higher. I think the Nasdaq is probably getting very long in the tooth right now after the rest of the big tech names come out. I don't really think I want to be super long the Nasdaq. I don't know if I want to short it, but I'd rather stay on the sidelines and not buy it here at the all-time high, with only a handful of big tech names coming out. I would rather buy the rut, honestly. The S&P, I don't know. We should tighten up stops here. I think, as you can see, that's the all-time high right there. I don't know. I think we could see some consolidation back here. It's 2,800 before making the next run up. A lot will depend on the rest of the earnings. We're not even halfway in yet. We've got about 40% of the companies have reported. So anyway, the whole point of the video tonight is that we are right in the middle of the hurricane. Earnings coming out right and left. Some are good, some are bad. Things are moving around. Be careful, be nimble, tighten up your stops, take profit when you got it. Be watching for these overhead levels. Now, if we break out and keep going, maybe we can still run on the S&P, and I think the Russell still has some room to run. The Nasdaq has some room to run, but it has less room to run when you took out these all-time highs way back then, and we keep taking them out. And as we know, this rally is pretty much built on tech right now, so there's a lot riding on the shoulders. So be nimble, take profits when you can, use stops, maybe start thinking more about hedging. I put on a little hedge in the SO room today. I did a butterfly, a little bit lower butterfly in the S&P, and just in case. And I'm getting a little more cautious. You guys are used to hearing me be bullish, and I'm still longer term. I'm still bullish. But short term, I'm getting a little more nervous as I see some of these big names, not coming in and crushing it. So we shall see in the morning how it goes. So good trading. Hope this helps, and I'll see you at the next update.